Tesla is well on its way to a $1 trillion valuation. Let's look at Tesla's financials and see how they might achieve this $1 trillion valuation. I'm Jonathan Stewart, and welcome to Cleanerwatt. If you've been following Tesla stock for the last year or so, it has skyrocketed, and especially over the last month or so, it has shot well over $1,500 a share. With this increased share price, Tesla is now the most valuable auto manufacturer in the world, topping Toyota by a pretty large margin. Tesla currently has 185.48 million shares outstanding. With the current stock price, this gives them a market cap of around $280 billion. In order for this market cap to reach $1 trillion, that stock price would need to go up to $5,391 or so, or if they do a 2-for-1 stock split, that stock would need to be around $2,696. But is this kind of stock price jump reasonable, or is it kind of crazy? Of course, no one knows the future, and no one really knows where Tesla stock is going to go, but all the indicators seem to point to the fact that Tesla is going to grow, and they're going to grow quite quickly in the coming years. Now, when it comes to the market cap and what the market is paying for Tesla stock, that does not mean that Tesla as a company will be technically worth $1 trillion. But what a $1 trillion valuation would indicate is that the market believes that Tesla as a company in the future, with its current growth rates and projections, will be worth $1 trillion. But the question for this video is, can Tesla show that path, and does Tesla really have a path to being worth $1 trillion? Tesla has recently reached a lot of really important milestones. And one of the big milestones that they just reached was putting together, for the first time in company history, 4 quarters of GAAP profit. As you can see from this chart, in Q3 2019, Q4 2019, Q1 2020, and Q2 2020, Tesla posted a GAAP profit. If you add up these 4 quarters for Tesla, they had over $25 billion in revenue and over $360 million of GAAP profit. Their operating margin has also improved to 5.4% in the most recent quarter. Now, one thing to note is that this current operating profit does include regulatory credits in that, and if you subtract those out, this number is not quite as high. But in the conference call, Tesla mentioned that in the future, according to their internal financial models, they should be able to reach operational margins somewhere in the low teens. As we've mentioned, the stock price of a company is really based on the future growth of the company, and it's all about growth. If you look at this chart from finbox.com, you can see that the 5-year compounding annual growth rate of Tesla's revenue is over 50%, and when you compare that to GM, Ford, Honda, Toyota, and even Amazon, it's much greater. As you can see there, for both the 3-year and 5-year compound annual growth rate, Tesla is growing their revenues by more than 50%. Another really important fact that we found out in Tesla's most recent conference call was when Elon Musk mentioned that their operating margin goal is to be slightly profitable and to maximize market share. When I heard Elon Musk mention this, it made me think of Amazon as a company. Amazon in the past especially has been known to lower prices so that they can take more market share, and Amazon was fine with not making a lot of profit in the beginning because they knew that they needed to grow market share quickly, and in order to do that they needed to undercut the competition. That's something that Tesla seems to be doing, is they're going to have amazing products at amazingly low prices that other auto manufacturers are not going to be able to compete with. Tesla already has some of the best cars on the road, but they're going to increase the value of their vehicles by adding more features and slowly reducing the cost. When you think about Tesla's stock price having to go up 3 to 4 times in order for the company to be worth $1 trillion, it seems kind of crazy at the current levels. But if you look at Amazon as a company, in March of 2018, Amazon's stock was right around $1,500. When I pulled this chart, as of July 22nd, Amazon stock had risen to over $3,000. So in just over 2 years, Amazon stock has doubled because Amazon has grown substantially as a company. A few minutes ago, we looked at the 3-year and 5-year compound annual growth rate, and Tesla had a compound annual growth rate for the 5-year period of time, double that of Amazon. And so I don't think it's crazy for Tesla's stock, if they can continue that compound annual growth rate, to continue to grow at a pace similar to Amazon. Even though they're not the same kind of company, I believe the growth rate can be seen as similar. Another big topic that is really important to bring up when you're talking about the valuation of Tesla is that it's not really right to compare Tesla to Toyota. Tesla is a lot more than just an auto manufacturer. Elon Musk recently pointed this fact out when he said on Twitter, Tesla should really be thought of as roughly a dozen technology startups, many of which have little to no correlation with traditional automotive companies. I've talked about this fact in many videos before and I won't go in depth, but I do believe that it's a mistake to look at Tesla as simply a car company. I think Tesla should be valued more like a tech company, plus a car manufacturer, plus an energy company, and in the near future, plus an insurance company. So let's look at some financial metrics and some projections to see just where Tesla's revenue needs to be before the market might believe they're worth $1 trillion. There are a number of financial benchmarks that financial professionals use to compare one company to another or to look and analyze a company to see how they are growing and where they're moving as a company. And one of those metrics is a revenue multiple. So when you take the current market cap divided by the revenue, you get the revenue multiple. When a company is growing like Tesla and the future looks bright, the stock market price will trade at a higher multiple in relation to the company's revenue because it's factoring in that future growth. As you can see from this chart, when we look at the revenue multiples for Ford, Toyota, and GM, for the last 12 months trailing, Toyota is actually trading at a revenue multiple of less than 1. Tesla, however, is trading at a 6.2 times revenue multiple. That is similar to where Microsoft is at 6.7 times. Tesla's revenue multiple has actually shot up recently with the huge rise in its stock price. The last chart that showed the revenue multiple for the last 12 months trailing for Tesla was through June of 2020. Since then, Tesla's stock has shot up substantially, and if you take the revenue for the last 4 quarters of Tesla and you look at their market cap, they are currently trading at a 10.91 revenue multiple. So with the market giving Tesla such a high revenue multiple, how much revenue do they need in order to reach a market cap of $1 trillion? If the market continues to value Tesla stock at a 10 times revenue multiple and they reach $100 billion in revenue, that would equate to a $1 trillion market cap. If the revenue multiple of Tesla goes down to 8 times, then they'd have to reach $125 billion. And if Tesla's revenue multiple goes down to 4 times, they would have to reach $250 billion. So even in the best case scenario, a revenue multiple somewhere around 10, Tesla still needs to grow their revenues by about 4x. In order for Tesla to continue to keep a high revenue multiple, they also need to have a higher operating margin. As we mentioned previously, Tesla's financial models do point to the fact they should soon reach industry-leading operating margins, and that will be without regulatory credits. It also is important to keep in mind that they are currently in growth mode. They're building out several factories. They're doing R&D for a bunch of products and cars right now. And so, yes, they could shut off all those products right now and their profit would go up. Their operating margin would go up. But we don't want them to do that as a company. We want them to continue to grow. And as an investor, that should be your goal as well. And then also, Tesla has a very clear path in the very near future to increase revenue by 3 or 4 times because they are currently building a new gigafactory in Berlin, Germany. They are starting on a gigafactory in Austin, Texas. They're expanding Fremont. They're also building out the Model Y line at Gigafactory Shanghai in China, and also ramping up Model 3 production there. They have new vehicles coming like the Cybertruck, the Tesla Semi, the Roadster, and also the new Plaid Model S and Model X. When it comes to their energy products, they are starting to ramp the solar roof and also ramping more battery storage solutions like their Megapack. And on top of that, for every vehicle that Tesla sells right now, they have the option of an $8,000 software upgrade even before they reach feature complete for full self-driving that you can actually buy on that vehicle to get some of the full self-driving features and the future updates that will be full self-driving. And in a few years, when Tesla is able to solve full self-driving and it's all feature complete and all the regulatory things are in place, Tesla will be able to launch their robotaxi network, and that will also produce a lot of income. On top of all that, we learned in the Q2 2020 conference call that Tesla is planning at the end of this year to have Tesla's insurance in more states than just California. This could be a potential revenue and profit source for Tesla. So with all this growth in mind, a $1 trillion market cap for Tesla really doesn't seem that crazy anymore. With all the new factories and with all the new vehicles that they're bringing out in the coming years, I believe it won't take very long for the market to realize that Tesla will be worth $1 trillion. Of course, no one knows the future, and all these things that I've laid out are really just my opinion, and these are my future projections. But I believe that all the data and all the facts point to this being true. Thank you so much for watching this video. I hope you enjoyed it and that you learned something as well. If you're not already subscribed to this channel, please consider subscribing. And if you do subscribe, if you click that bell icon, you'll be notified when new videos are published. Also, if you click that like button, that will help other people find the video as well. I also wanted to take a moment to thank the Patreon supporters, which helped me bring this content to you. If you'd like to find out more about the Patreon community that I've set up, you can click the link in the description below. Thank you so much.